So slightly cautious on the markets. By the way, those are Escorts tractor numbers, quite weak. So the stock should also come up for you on the screen. Total tractor sales have gone down by 22% on a year-on-year basis and by 25% on a month-on-month basis. It's been a very weak season as a whole for tractor makers. You saw it with M&M and now you're seeing it with Escorts. Dilip Bhat also joins in. Dilip, I know you track these stocks closely, names like M&M, Escorts, etc. Escorts has traditionally been, a good wealth creator for the market, but now for the last couple of months has been under pressure. How would you approach this name now?
Well, I think Escorts had really had a good past, but I think off late probably they have not really done all that great. They hold a good potential to really turn around with a new set of young management, but somehow or the other I think they always seem to be faltering. Of course, the potential still is pretty good. So I think it will really test your patience if you really want to hold on to that. So maybe you'll have to take a time frame of 2 to 3 years. But I think beyond the numbers, there are so many restructuring. There is the cost cutting. They have a huge labor force. I think all those things probably will gradually fall in place over the next 1.5, 2 years. And in the meanwhile, if the tractor sales is not really supporting them, I think it's really a bad news. But otherwise, on an investment basis, yes, for 1.5, 2 years, one should try to buy this stock at every possible dips.
Dilip, hi, good afternoon. The big stunning stock of the day today has been HDFC within 5 rupees of a new all-time high. How would you approach this particular stock now?
Well, I think that HDFC, there seems to be, the way the markets have flared up, there is a good amount of buying and there is a ETF buying, that is what we understand. And probably in that, the entire scheme of things, I think HDFC also fits in very highly over there. But today we have seen that a lot of the housing finance companies have really been doing pretty well, whether it is HDFC, LIC Housing Finance, even Indiabulls Housing, I think all of them have done pretty well. But HDFC, I think for a couple of reasons, maybe there is an insurance angle to it. Plus, they are also talking about possibly in future or maybe in the near future, HDFC Bank and HDFC getting together. Who knows? Right now, it's still in the realm of speculation. But I think that's a very strong possibility. And all in all, I think HDFC still from the current level doesn't appear to be overly expensive even from the current levels. Of course, it has moved up quite a bit in the last 3 to 4 months. But as a part of your core portfolio, it certainly deserves a place for next couple of years.
Okay, fair enough. Pashupati, hi, afternoon. Just continuing the discussion on the banking sector, a lot of focus is on PSU banks, I understand, but a lot of private sector banks today are hitting fresh highs, names like Yes Bank, IndusInd Bank, etc. Would you put any fresh money into this sector?
Well, this sector has actually been a leader, and actually I like the HDFC Bank like myself, and I do actually own it, but out of the whole lot. But I feel that there is very high expectation of some policy coming out of this big bankers meeting, and it's always this is one of these buy on rumor and sell on fact. So we'll find out on Monday what has actually come out, and then we'll see the real reaction. But obviously, there's going to be maybe an easier mechanism to consolidate banks, and I think that's going to help people like IndusInd and Yes Bank that you mentioned who want to get out there and get rural penetration. And there are a lot of PSU banks and smaller banks that are out there that have sort of localized distribution that could quite easily be done the way Kotak and Vyasa Bank joined. That would be another way of some kind of policy that would help. That would probably be in effect, and that would be interesting for everybody and the whole sector.
Okay. One other interesting stock I want to pull up today is TVS Motor. That one is down about 4%, coming in for profit taking after many days of a heady run that it has had. How do you deal with this one, Pashupati? Because, this stock has clearly run well ahead of its fundamentals now.
Well, the thing is that you have to look at that sector, and the sector there's been change because Honda has come in a big way, and Hero Motors is still doing well, and TVS seems to have dropped a little bit. So I think that some of that is the reaction of shifting from into the big from the small, and that's what I would assume in that sector.
Okay, Manas Jaiswal is also with us. Manas, technically, heading into the next week, do you think a breakout is imminent for the Nifty, and what would be a stop loss and target for any kind of Nifty trade now?
Definitely, this is a clear breakout. It has broken that 23rd December high of 83.65, and it has started making higher tops and higher bottoms. You can see on the daily chart. So I think stock in that Nifty has potential to test its all-time high of 86.25 now. So even at current levels, one can go long with the stop loss of 82.80.
And what stock or stocks would lead the Nifty there, Manas?
Definitely banking stocks. Like if you see the private banking, especially ICICI Bank and SDFC Bank, both stocks are looking very strong on the charts. ICICI Bank has given a clear breakout on the charts. I think one can buy ICICI Bank at current levels. Keep a stop loss 355. Stock has potential to test 400 in next 1 or 2 months, but the short-term target should be around 280.
By the way, the market has now resumed its uptrend, Anuj, and getting back to the high point of trade. Even the Sensex now back to a 400-point gain. So turning out to be a day quite in favor of the bulls today.
It's a very strong session. You know, the last 20 minutes or so has again reiterated that really bulls totally back in control now and looking quite good. Volumes also picked up. 30,000 crore on the cash market, 2 lakh crores here. I think yesterday was sub 1 lakh
Sub 1
crores.
lakh crore.
Yeah.
So closer, I think 85.
Yeah, today is 2 lakh crores.
I think a lot of people have come back from holiday. It's clearly that.
Even in our office, actually, a lot of people come back.
We've always here. Dilip, now, is it when the FIs left for the break at the end of last year, they were big sellers. Is today buying on anticipation that they may come back as big buyers? Because in their absence, we've seen a government at least show intent on reform. They've come up through some ordinance, so that they've shown some intent on this whole banking summit is at least some intent to get the bank, if not privatize, certainly not privatize public sector, but at least to get the public sector more efficient. So this is the government showing intent. So is this front running before FIs come back and start buying? And could there be disappointment?
Well, arguably, we all know that the single biggest driver of market has been the FIIs. So on one hand, even if there are good amount of noises being made or good amount of reforms being rolled out, but without the FII support, I don't think that the markets would go up. So I think this is a very important thing that which all of us are factoring and assuming, that given the fact that the FIIs too have very few destinations apart from India where they can really take a sustainably long-term call. So India really fits the bill properly. So I would presume that yes, they would come back, who knows, with the same intensity, we do not know at the moment. But there should be a fair amount of buying for this market to really get a good amount of tailwind for it to really be on a sustainable bull run.
Pashupati, you've been spending some time outside now, especially in the US. What is the feeling there? Because one, yes, as Dilip points out, that this is one of the few destinations left. But on the other hand, you got a dollar that's showing no signs of slowing down. In fact, could that be a swing factor where?
Well, there are two factors which I think people have forgotten about over here. One is that we are part of the BRIC. And Brazil and Russia have got hammered in the last 4 or 5 months. And obviously, if you're an emerging markets investor, you might look at putting a very little bit of money in Russia or in Brazil, where you have a chance of probably doubling your money in 6 months, rather than in India, if you put in money where you'll make a return, but you're not going to see anything that might actually double in 6 months. I mean, it'd be nice to see it, but I don't see anything that an FI would buy that would actually show that. So there is that caution in the sense that we're not going to get that incremental flow. Plus, as you mentioned about the US, if they do raise rates back in the US and there's a pullback, and there's a lot of noise about how well the US economy is doing, then all of a sudden, the incremental flows will go out. We probably won't suffer as much. So the way our currency went by 4-5% last year, it will go up. It may suffer, the market may go down 3-4% as a result of it. But we will suffer if there is a pullback.
Okay. By the way, there's sure some amount of arsenal that FIs have come back with. Look at the ending for the market about at the high point of trade. And for the week as well, the Nifty is up 2.5% this week. The mid caps are up 3.5%. And the small cap index is up close to 4%. The BSE small cap index up close to 4% this week. And if you're looking out for gainers, it's interesting because the capital goods index is the biggest gainer this week, with BHEL up about 9% odd. So clearly, generally, not just are the good quality stocks moving, but some of the dogs of last year as well have moved quite well.
Also, Sonia, today you will, we could be wrong, but today's likelihood you'll get a good FI number because look at HDFC, 4.5% higher.
Yeah.
It won't move like this unless there's some big buying from FIs, because this is not a stock where a lot of traders are just punting in the F&O market and the stock is moving up. This is serious delivery based buying.
Indeed. In fact, I wanted to go across to Dilip to ask him the same question. Dilip, there's been a lot of blue chip buying in the market that we are seeing. Names like HDFC, names like Asian Paints, I mean, sudden pickup over there. What are the top nifty stocks that you would allocate some fresh funds into now?
Sonia, just before going into that, even at these levels, as what we just discussed, that maybe there's a good amount of buying in HDFC, if you were to take, despite the fact that the markets have gone up so much, the mid caps have gone up so much, the micro cap stocks have gone up so much, but actually the valuation gap between the front line and the other stocks bearing a few have actually gone up significantly in the last 3 to 4 months, which means that people are still flocking behind some of the blue chip stocks. So I think on an overall basis, we would still be rooting for something like Tata Motors. We would still be rooting for something like Larsen & Toubro. I think we would still be rooting for something like HDFC Bank. I would also include the PSUs, though they are not really frontline, but as a PSU banks as a pack, I think they look pretty good. And in the pharma names, I would still say something like a Lupin, Cipla or a Glenmark to be as a part of the overall portfolio. So I think this is what I would look in the front lines.
All right, so those are some recommendations coming in from Dilip, but we just have about less than 5 minutes to go for the markets to close. So let's discuss some more stocks. Pashupati, I don't know if you are interested in the paint space, but it was in a slumber for the month of December. And now once again, the paint stocks have started to move. And this is a direct play on lower crude prices. I mean, a big beneficiary over there. Would you invest in any of these
Well, the paint space also would, not only is it lower crude prices, but also may mean that there's some policy that will drive the real estate stocks. And that would be a derivative of that. And, Asian is basically moves on the whims of a couple of large FIs based on their money flows. And we have to live with it. But I also noticed, as you mentioned, Shalimar and Berger both up quite a lot earlier in the week. So, yes, it's obvious that they're beneficiaries. And obviously, people are going to be painting more houses with this Swachh Bharat and all these other schemes that are there. You're going to be painting houses. And Salman also went and painted some houses yesterday or day before. So maybe it's a thing. If our country looks neater, we'll get more tourists, and that's also good for us.
All right. Well, we just have about 1.5 more minutes to go.
Manas, a quick, we are closing at the highs of the day, so I know you've already struck very, very bullish noises, but does the action of the last few minutes change anything for you on the positive?
No, definitely. Definitely the markets are positive. It is a clear breakout, I think, and see, if you see the longer period of time, say around 2 to 3 months time, I think Nifty has potential to break its all-time high of 86.25 also, and it can come up to around 87.50. So any dip is a great buying opportunity.
Okay, let's wrap up the markets for the day. It's been a spectacular day of trade for the markets. In fact, 400 points up for the Sensex, 120 points up for the Nifty. Not too many people really expected it today. At the start of trade, there was an expectation that it would be a quiet day, but surprise, surprise, a big boom is what you've seen. In fact, the bluest of blue chips have seen buying today. So, as Anuj pointed out, perhaps on Monday, you'll see a big FII buy figure. HDFC, ICICI Bank, Axis Bank, L&T, Infosys, Asian Paints, all up about 1 to 4.5%. It smells of some basket buying because it's been a secular run that you've seen on the upside today. TCS, ONGC are other names that are not too far behind, up about 1 to 3% or so. In fact, on the losing end, you have only stocks that are under pressure for some bad news. So M&M because of weak sales numbers, Hero MotoCorp because the sales growth has just been flat at best, Bajaj Auto because of weak sales numbers, BPCL comes in for some amount of profit taking. But largely, Anuj, this has been an exceptional day of trade for us on the upside, and lots of buying in heavyweights.
Indeed, lots of buying. In fact, today was, as you can say, a blue chip specific day, as Sonia pointed out clearly. the kind of stocks that rallied. And in fact, the mid-cap index underperformed today despite a 0.7% gain. It's actually half of what the Nifty and the Sensex did. And even the advanced decline ratio, it opened at 4:1, ended at 2:1, which is still quite healthy actually. So no complaints over there. But today was especially quite big for large cap. But there was some mid-caps that moved. And again, the story has been high beta. So Unitech was up 3.5%, JP Associates 6.5%, Sozlon up 2%. South Indian Bank, that was interesting, that was up 7%, big volumes on that particular stock. Then you had Tata Tele Maharashtra up 10%, Gujarat Pipa about 12%. So all the high beta theme quite clearly, Senthil, continuing in trade. Man Infra was up 16%. That was one stock which again came out of nowhere. In fact, a lot of stocks, Ujas Energy, Berger Paints, Marksons Pharma, a lot of big buzzers in today's trade.
Okay, so that's been a great day for trade. I remember yesterday, this time we were joking about how dull Friday likely to be, wondering what we would do. But market as always have surprised us. Dilip, how much would you say, what would you say the factors are this for? Anticipation FIs, was it the HSBC PMI data that came out, or was it you just can't, you just don't know what turns the markets?
Well, I think all of these, as what you mentioned, Senthil, right now, certainly the FI is the biggest factor. But more important, I think as we run into the first ever maiden budget of this government, I think the expectations will start getting built up. So some kind of a mild euphoria can get built up pre-budget. Maybe how soon, I don't know, but I think somewhere by middle or end of January, we should see that getting built in. But at the same time, as what we see, the results are also going to come out, and results probably will puncture a lot of hopes, though there is not great expectations in terms of the results. So all in all, I think it's going to be a little more volatile session, but with a bias towards the fact that it should keep on going up, at least for some time, especially in a run up to the budget.
Okay. But you said that you won't be buying in a hurry, but when you start buying, what would you be buying? Are there sectors, are there stocks, what are your...
Well, you know, I actually feel that probably mid-cap cement, simply because the infrastructure projects are going to probably get relief. They may not be in the same hands as they are today, but they will be in new hands, stronger hands, because PE funds are also looking at them. And so projects have to be done. So steel companies, again, I think there's going to be a lag. The budget will bring some stuff in, so the buying should be done probably in the second quarter. And I actually see that this year will be better than, higher than where we are now. But I think we'll go down before we go up. So that's my thought. Maybe a good January, but the rest of the year, the rest of the quarter will be tough.
Okay. Well, just a couple of more stocks before we wind up. Dilip, Bharat Forge was in the news today. It made a fresh acquisition, a French company it acquired in the oil and gas space. How are you positioned on this particular stock now?
Well, Bharat Forge had a very dream kind of a run in the last couple of months. And possibly, I think, the way it is positioned in some of the sectors, so it's definitely very well positioned to capture the opportunities out over there. Of course, it's going to be a long-drawn affair on a long-term basis. So I think on a longer-term basis, this stock will still be on your radar, and it will still merit a place in your investments. Though there is simply no doubt that it is significantly ahead of its intrinsic value. But that is true for most of the other stocks, because they're all going up on the expectations. But all said and done, Bharat Forge is a stock which you must own.
Pashupati, in a week from now, we'll be discussing Infosys numbers. IT has underperformed actually. So between Infosys, TCS, would you like to take fresh investment?
No, actually, I'm a little concerned about that sector simply because I think the business model is changing, and it's going to be a question of how they adapt to it. And the guidance is going to be very interesting this time, because they're all, with more and more stuff happening in the cloud, there'll be less body shopping, and they actually have to rework the way they do business. And the competition is not from, within themselves, but it's from the Cognizants and the Accentures of this world that are going to give them a real run. The work is there, it's just being done differently.
Differently now.
All right. Well, talking about earnings, on the 9th, we have Infosys, which is next Friday. Then on the 13th of Jan, we have IndusInd Bank that comes out with numbers. On the 15th, there's Bajaj Auto. On the 16th, Axis Bank. So that's the calendar as far as the next fortnight is concerned. A lot of these nifty and good quality names coming out with their numbers. Dilip, from the stocks that I mentioned, Infosys, IndusInd, Bajaj, Axis Bank, which are the companies you think could deliver a good set of numbers this time around, and maybe one could buy ahead of earnings?
So the second question, whether you can buy or not, that's a separate question. But I think the good set of numbers you can certainly expect from IndusInd Bank and Axis Bank. And I think in a way, Bajaj Auto, the way I saw the numbers, if you see the proportion of the three-wheelers, which contributes maximum to the profitability, I think despite their two-wheelers being down, overall numbers may not turn out to be so bad for them. Of course, there's too many headwinds at the moment. But I think all in all, for the IT especially, it is traditionally the weakest quarter because the number of days are too low. And one doesn't really know what is the kind of hit that they will take in the European currencies. So overall, I think it's going to be a mixed bag and a bit of uncertainty on the earnings front because there's likelihood of something really hitting them, which has not been factored at the moment.
All right, gentlemen, we'll wind down on that note. In fact, we thank all of you for joining us and taking us through the last 1 hour of what has been a very strong day of trade. 400 points up on the Sensex. Who would have thought on a dull Friday like today? We didn't expect much, but look at what it turned out to be. Exceptional day of trade. Thanks so much for joining us. We'll slip into a short break.